last week we talked about buying below the daily open in bullish conditions. So today is going to be basically the flip side to that presentation. So we're going to be shorting above the opening price in bearish conditions. Okay, I'll say that one more time. All right, shorting above the opening price in bearish conditions. Why the open, high, low, close information is important. And of course, you guys already know me, John Phibb of Trade House Houston, LLC. All right. So what are the objectives for today? We're going to take a look at noting the opening price and WM and D, right, is monthly, weekly, and daily. Okay, that's what that's for. And it's actually also applicable as well to the sessions, and we'll get into some examples later on. Once the presentation is over, there's some examples in the presentation, and then we'll go over a couple of more examples once the slideshow is actually done. And then after that, if we have any questions, then we'll go ahead and deal with that as we get them. All right. So we are going to be looking to short above or near the opening price. Now, of course, it's ideal to short above the open, but as you'll see in some of the examples, if we get into a retracement, it may not be above the open, but it could be near the opening price, which could be just as beneficial. All right. We're going to be taking a look at using other smart money concepts that are in alignment with the opening prices. And of course, just like I said, some examples. All right. I know you guys love examples, right? So starting off with a quote from one of the GOATs, Mark Douglas himself. All right, a probabilistic mindset pertaining to trading consists of 5 fundamental truths. 1, anything can happen. 2, you don't need to know what is going to happen next in order to make money. 3, there is a random distribution between wins and losses for any given set of variables that define an edge. 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. 5, every moment in the market is unique. Okay, and of course that comes from Mark Douglas, Trading in the Zone. And number 5 probably has hit me the most, throughout my trading career, understanding that every moment in the market is unique. And that just kind of has to deal with, losing streaks. If you're on a 3 or 4 losing streak, it should be able to help you out on that next trade to truly understand that every moment in the market is unique. So your last trades have nothing to do with the upcoming trades. All right. So there's a little mindset for you there, a little sprinkle of some mindset. All right. So noting the opening price. This is a hypothetical candle, and you guys know that my charts are black and white. And so the white candle means that it's going higher. That means the candle has a closing price higher than its opening. And the black candle means the price is going down, which means the price closed below the opening price. Okay, so if you guys have green and red candlesticks, that means this would probably be a red candlestick, right? And of course, you guys should know these basics by now, where the open, high, low, and close is for all of the candlesticks, for each and every candlestick. All right, that's very basic day one information, but today's focus is the opening price, okay? This is where shorting is ideal. Okay, so the opening price should be noted. That's what we did here, right? We looked at the open. Now on the chart, we could be actually putting in a price level versus just having a line that says this is the open. But it's totally up to you. All right, whatever you want to do. The ideal shorting scenario would be above or near the opening price. Now, again, it has to be in bearish conditions. If you're in bullish conditions and you're gonna screw it up. All right, we'll just put it that way. You'll screw it up. All right. This is applicable to the monthly, weekly, daily, etc. And like I said, this is also applicable to the sessions. So we're talking about specifically, at least for me and my trading, I pay attention to the London opening price and the New York opening price. And of course, the New York opening price is a little bit more important for the indices, right? You guys know that I trade indices a lot. And so that New York Open is very important. And in Forex, you can use both, but sometimes that London session is a little bit more important when we talk about Euro USD, GBP USD, when we're looking for reversals and things like that. But in addition to some of the examples we've gone over the last couple of months, right? You guys remember that consolidation, the false breakdown, okay? You could also incorporate the opening price, okay? And that just kind of helps confirm. It gives you a little bit more, I guess, confirmations, if you will. That's just another something that you could put onto your checklist, right? I know you guys are always looking for that checklist of, what should I be trading? What concepts should I be using? And that's something that you guys should be building on your own, okay? And we've given a lot. We're going to continue to give more, and we're not done yet, okay? We are not done yet, all right? And I see that you guys are sending private messages, and that's fine, but we're going to get to those at the end of the presentation, okay? Here's a tip. Trading view lines allow for text annotations, so you may go in and manually write something such as opening price if you wish to do so. And that is something that I've done, and you guys have seen me do that on the power hour sessions, also the London bounce back, the bounce back London open sessions. You guys know that I have a bunch of lines with presets like equal highs, equal lows, imbalances, institutional candles, and things of that nature, okay? And I'm not going to give you that list here, all right? This presentation is not for that, okay? So, using other smart money concepts in alignment with opening prices. Based on your level of experience with smart money concepts, you may backtest adding your favorite concepts. We will not be going through all of them in this presentation, but we will look at a few examples. Now, why is it, right, that I'm not going to go through every single smart money concept? Guys, you got to realize, if I did that, we would be here for well over an hour, probably well over 2 hours, okay? And trying to, put a whole bunch of things together, it's going to take time. And trust me when I say this, I know you guys are eager to learn, but I know like roughly around the 1 hour time frame is when a lot of the attention sort of drops off, right? And this type of stuff, you need like focus. You need to be 100% paying attention, meaning like the phone's off, the door's closed, notebooks are out, and you're focused. And I know that giving 100% is hard to do for more than an hour or so, okay? And that's just how it is, all right? So it is what it is, all right? So time of the day is very important. This concept can work with all the daily opening prices as well as the session open, okay? And just like I said earlier, that goes for London Open and the New York Open. So depending on what you're trading, one is probably going to be more favorable than the other, okay? And then of course I'm going to leave you to back test, and figure out what works for you and based on your trading plan, because I know some of you are in Canada, some of you are in Hawaii or California, some of you are in Europe, so the time zones are all different. So you have to tailor a trading methodology to your time zone, to your personality and things of that nature. So what I'm attempting to do here is to give you a guideline, and then you go in and really grind out the details. You know what I mean? So there you have it. Oh, and here's a tip. Back testing should give you more breakthroughs and experience than live sessions or presentations. So be sure to study on your own time. And you guys have heard me say that plenty of times, over and over and over again. All right, that your breakthroughs are going to come from your own time and not just, me or other educators giving a presentation. Really dig into your charts, guys. Okay. All right, so here we have a chart of the euro, also known as fiber, on the daily time frame. And I want you to look at a lot of the down days, right? So this presentation, we're not necessarily looking at the up days. Okay, we're going to be taking a look at the down days. All right, so look at all of the down candlesticks, okay, where price closed lower than it opened. And look at basically a lot of the opportunities that were provided if you had basically shorted above the open. So we're looking at a couple, hold on, we're looking from like the end of 2019 right into about the end of February. So this is a few weeks, couple of months of data. So of course, we're not going to have 1,000 trades because we're basing this study off the daily time frame. Okay. But here we go. Now here's just a couple of examples, and the arrows actually thrown off a little bit because I had to move the chart the last second and I didn't get a chance to move the arrows. But let me see if I can just use my mouse. So this arrow is pointing to this candle. This arrow is pointing to this candle. This arrow is pointing to this candle. Actually, probably all three of these. And this candle here is pointing to this one. Now, it doesn't mean to not look at the other ones. Okay, look at this big down move. A lot of these candles, are consecutive. Shorting above the open, shorting above the open, shorting above the open, shorting above the open, shorting above the open. Oh, one up day. Shorting above the open, shorting above the open, and then boom, boom, boom. Okay, so that right here, being able to get in above the open and being able to hold that or even day trade that for 2 or 3 days, guys, this is a daily time frame on euro. So you can easily tell, I mean, we're talking about 100 pips or more, okay, on that swing trade with very little drawdown, very little drawdown. All right. And all right, now we're up to like 63. We started with like 20. So hold on real quick. Just want to make sure that everyone is muted. All right. So there you have it. All right. A lot of these opportunities were there. Okay. All right. So we've zoomed in to a 1 hour chart of the Euro USD, and the only markup I currently have is the 1.14 hold number. Okay, so I kind of gave that to you. And of course, this is hindsight. All right, it is what it is. A lot of the trades that we have been calling throughout this week have been absolute fire. And I'm not trying to say that I'm some guru expert trader. Okay, I'm just saying we were able to find high probability trades. We gave them to you, and pretty much all of them hit this last week with S&P 500, which is SPOOs, with Euro, which is fiber, and then of course with cable, with GBP USD. So, but anyways, we have noticed on this example that the 1.14 whole number basically is acting as rejection. So you can see, hopefully you guys can see the mouse right up in here, right? We got a rejection. and then it hit twice in here, and then a very solid sell-off from the 1.14 whole number. Okay, so if you were to basically recognize this sell-off, and I know some of you that really love break of structure, you could say that this is definitely a break of structure, right? We broke some lows. Okay, so on this day, which according to this chart is the 12th, right? This is where you would want to note the opening price and then look for shorts above that opening price. So I do want to give you guys about 20 to 30 seconds or so, kind of take a look at the chart and determine what it is that I'm about to show you. And while you're doing that, I want you to keep in mind there are three things to a trade, right? Your entry, your stop loss, and your target. So even though we're focused on entries right here, you can also be focused on an actual target, okay, for a downside objective, right? So if we're in a bearish environment, we need a downside objective, okay? So let's go ahead and go to the next one. All right, so the very first step would be noting the opening price. And to be honest, I might have screwed it up because if it's based off this down candle, the opening price actually might be down here. So when I was putting this in here, I might have went a little bit too fast. So I might have goofed up on that. Apologies. But nonetheless, it's only off by like 5 or 6 pips. So I wouldn't be too worried about it. But just know that when price starts to trade well above the opening price, then it's okay to be wrong with that. All right. And obviously I'm a human, I'm not perfect. So there you have it. But so some of you guys have already in the chat, pointed out where you would be wanting to short. Okay. And you're correct. All right. We would be looking right here at the imbalance. Okay. And just like I do on TradingView, I use the dashed lines or the dotted lines. And so I did that with the PowerPoint as well. Okay, so the imbalance is from this candle's low to this candle's high. All right, and that's exactly where I drew them from. All right, so what does price do? It trades above the opening price, well above the opening price. Okay, trades into the imbalance. So we would be looking to short that. Now this is on a 1 hour time frame. So maybe you could go in and fine tune that entry with a smaller imbalance, or maybe you waited for this sell off and then a retracement. I mean, there's a whole lot of different ways, different opportunities. You could try to pick the high, you could wait for a retracement or a smaller time frame imbalance. There's a lot going on. Okay, but just for the sake of presentation and for the purpose of being a little bit more simple, we're not dropping down into a smaller time frame. I do want to give you guys an opportunity to go back into your charts on your own and see if something was there. Okay. But this is PowerPoint, so I can't just click the chart and we magically go down to 5 minutes. Okay, we can't do that. I'm gonna leave that for you. All right. So just like I said, if we have our entry, or even somewhere down in here, right? Where could our stop loss go? Possibly at the high of this imbalance, or maybe a few pips above the imbalance, right? Just in case we're wrong and price wants to go higher, right? So now we need that third thing, which is our target. So what would be our target based off of this chart? Oh, I gotta turn that off, my bad. I told you guys put your phone on airplane and mine's not. So let me do that real quick. All right, sorry about that. Bad John. All right, so in this presentation, right, we need a downside objective. So what's gonna be that downside objective? It should be fairly obvious, at least to some of you. All right, this is your first time here. It may not be so obvious, okay? So opening price on which day? This was the 12th, I think, of June. Because today's July 4th. So I think this was June 12th. I could be wrong, but I think so for your own charts. Okay, so yeah, some of you guys are saying the new low. Okay, so boom, right? Where's the liquidity at? If this is a bullish market, right? That's what retail is thinking, right? Where are their stop losses? They're going to go right under that low. So there's liquidity under this low. So that would be your downside target. Now, this is for a day trade. Okay, I just want to let that be known. This is for a day trade, intraday, right? Around 1320, 1330, and then getting out at 1220, 1230. So that still is a good amount of pips, okay, on Euro USD. Very good amount of pips. All right. Now this could have sold off. I don't know because I don't remember what happened specifically the next day. But maybe you took 80% off, right? Like let's say you had a standard lot. Maybe you took a 0.8 off down here and you let that other 0.2 run just in case we do happen to go lower. Okay, maybe that's also something that you could have done. All right. So basically, that is shorting above the daily open in bearish conditions, right? We were conditioned to go lower based off of this rejection, based off of the break of structure, based off of liquidity resting under this low, getting in on a smart money concept, possibly waiting for a smaller time frame retracement. And then also, guess what? If you draw fib from this high to this low, I can guarantee you that's probably at a 50%. Oh, but John, I can't catch the high, right? Okay, that's fine. What price is this right here? 1320. Not only is that an 80-20 level, I forgot to put that in there, my bad. This is a 20 level, but guess what? That same 20 level is still above the opening price. It's still above the opening price. What's the title of this presentation? How to catch the high of the day? No. The title of the presentation is shorting above the opening price in bearish conditions. So is this above opening price? Is that still an acceptable entry? Yes, it is. There you go. All right. All right. So we got one more example. Oh, there you have it. Euro USD 1 hour, June. This would actually be the 9th, 10th, 11th, and 12th is this data range. So glad I put that in there. All right. Here is another example on the Euro USD. This is a 15-minute chart. And actually, I did give the date first. So boom, there you have it. This is Fiber on June 4th and June 5th of 2020. So please, guys, go back into your charts and look at this for yourself. Now, if you're watching this, you know, in 2022 or 2023, and TradingView doesn't give you this data, then sorry, you know, you're viewing it 3 years later. I can't help you. I can't help you. But nonetheless, I'm sure you can find very similar setups without having to actually go back to this date. Okay. But anyways, so looking at this chart, you guys should probably already know what I'm about to point out. Number one, I think it's very obvious. Number two, this was pointed out to you on June 4th and June 5th. I remember because we did that on either it was the bounce back session or it was power hour. All right. And I stream like every day. So sometimes I get the, you know, which session I set it on confused. That's why I try to do a little bit of recap on both. So that way you guys don't get lost and that way I don't get lost either. But nonetheless, so very first thing we do, okay, got to note the opening price. Now, this is for the daily candlestick. We haven't done any opening prices for the sessions just yet, but we will get into that. So this is just based off of the TradingView opening price, okay? Trading that daily candle. But we refine it a little bit more by actually going in and using the session. So we'll get to that, but we got to get through this one first, okay? So here's your opening price. That's the first thing. And then now we want to look for an entry for a short position. Now, where would that be? Now I'm going to ask you guys, if you want some chat participation, now I'm going to ask you, where is that going to be? Where are we going to be looking to short? We already established it's going to be above the opening price. We got it, but we need a little bit more specific. So use your knowledge with smart money concepts. And if you want to challenge yourself, if you're watching the recording, if you want to give yourself a challenge, a little bit more time, then pause the video here and look at the chart and then come back when you're ready and we'll continue. All right. Todd, I'm surprised. Yes, finally somebody got it. Yes. Todd is awesome. Kudos to you. Kudos to you. But all of you, or everyone else, you guys are still right. Okay. We would be looking right here. Okay. Right here at the equal highs. So you guys know that there's liquidity above that, right? So let me just see. Let me just see real quick. Yeah, so Madeline, yes. Jambo, yes. Todd, yes. Definitely yes. Falco, yes. Shorting above liquidity. So you would be correct. You would be correct. So you can short right at the equal highs. Now, when you do that, you're most likely going to get some drawdown. Now, why is that? Because the market has to push past the equal highs and also the equal lows to a certain extent. Now, on this example, since we're looking at a 15-minute time frame, we also need to throw in that 50s, 80s, and 20s, right? So if you start right at the 50s, you have a 50 level right here. So the 50 levels kind of already been traded through quite a bit. So we don't need the 50 level. The 20 level obviously is way down in here, so we don't need the 20 level. And the only other option after that would be 80. There's only three numbers: 80s, 20s, and 50s, right? So if there's no 50 and if there's no 20, what's left? 80 level. That 80 level comes in not only above the opening price, but also above the equal highs. So now you're getting in well above the opening price. Now you're getting in at the high of the day. That's what you want, right? You want to short the high of the day. You want to buy the low of the day, right? How do you think you do it? That's what this presentation is for. to show you how to do it, to teach you guys how to do it, right? When I was trading, little history lesson. When I was trading binary options, this is how I became number one on my broker in 2016. That's how I did it, using this concept. And if you guys haven't seen that on Facebook, okay, it is on my Facebook, but I'm not going to tell you to go there. Okay, we're trying to be professional here. But I do have screenshots of when I was actually number two, and then I actually got bumped up to number one. I had like 16 trades that were without losses. And now they were stacked. Okay, I took, 5 or 6 trades like on one particular setup. So it wasn't 16 independent trades. But since I won 16 consecutively, that's what bumped me up to number one on that platform. Okay, but this is how I did it. Personally, I don't really, you guys have almost never heard me talk about binary options. I've been getting a lot of questions recently about binary options. I don't trade them anymore because the risk to reward is not favorable. I mean, you can make money trading binary options, but the risk to reward just isn't there. And as me trying to be the best that I can be, getting towards that professional trader, right? I want to take trades that have a 1 to 3, 1 to 5, even 1 to 10 risk to reward. And binary options just doesn't give that to you. Now in Nadex can. Their pricing's a little bit different, and you can get 1 to 3 with them, but it's just with Forex, it's just, I don't even know how to put it into words. All right. Forex, it gives you a risk to reward that binary just can't give you. So that's why I don't teach it. But since I did really well, I want to show you how I did really well in binary was based off of this presentation. Shorting above opens and buying below opens. And I did a very good job. Okay. Now, did I screw it up sometimes? Absolutely. I wasn't perfect. Okay. But that's how I got there. All right. So there you have it. Now, we talked about the entry. We're still not done with this slide. We have already looked at the entry, right? And assuming that, I don't know, we have a, I don't know, 20 pip stop, 30 pip stop, it was, or maybe we went into small time frames and played a retracement. I don't know. We'll figure that out later. But we need a target, right? We need a target. So what would our target be in this particular scenario? Yeah. There's another analogy I want to show you, but I'd have to exit the presentation, so I'm going to get to that after. And it has to do with the Bugatti Veyron. And if you're not familiar with the Bugatti, basically it's one of the fastest cars in the world, if not the fastest. So Kia, I got your name right, hopefully. Kia, Charity, Kaline, Jambo, you guys are saying imbalance. Okay, so that's perfect. That's perfect. So let me go ahead and click the next slide. So if you were to look at this run higher, meaning from this low up to this high, right? Don't look at this imbalance just yet. Go to the one on the bottom first. The imbalance that was already filled, right? The one above it was not filled, so it could be used as a target to the downside. Now, why wouldn't we target this one down here? Because look how deep of a retracement we got on this, right? This run higher came all the way back down. That's probably a 618, maybe a little bit past the 618 retracement here. So to me, in my opinion, that is a balanced price action. That's balanced to me. So on the run higher, there was a retracement from the first high down to the top of this box, and then it, later went on to create equal highs. But this, right, this is an imbalance to me, especially right here, right? You guys see right here, this candlestick has no wick to the downside, right? And so that to me is also an imbalance. So at least from an intraday standpoint, I would draw these two lines out, especially this wick right here, excuse me, the body, the lack of the wick. I would take that, draw that out, and that would most likely be my target. So the ideal shorting scenario was at 1380. And if your target was here around 1300, right, that's 80 pips intraday. So the last trade went for about 100. This trade went for about 80. So that's two trades in almost 200 pips. That's not bad. If you ask me, that's not bad at all. That's not bad. So someone asked if you have an imbalance on the 1 hour, and if you go to the 15, it's already filled. What would you do? Well, would you go with lower time frame or higher time frame? And we're actually going to get into that example because we saw that on GBP USD this week, which was also called out. But we're going to get to that. So you asked me. I mean, let me ask you: high time frame or low time frame? Which one's more important?
Higher time frame.
All right, there you go. There's your answer. Let's get it. Higher time. Yeah, you guys are saying higher time frame. Absolutely, absolutely higher time frame. All right, so let's continue. All right, these are my final thoughts. Previously, we discussed, which was last Saturday, right? We discussed buying below the open. Today, we discussed shorting above the open. This concept is applicable to both directions of the market, okay? Remember, blending multiple smart money concepts is where the high probability trading occurs. Now it is your turn to teach yourself through back testing and studying previous and future prices.